Peter Rose, Longwood Currency Trading. It's a kind of a chilly, wet mid-November day in 2021. Fight or flight trading. What does that have to do with, what does fight or flight have to do? You know, the terms are kind of similar in fight or flight, freeze, appease, approach, avoidance. Those are all terms that psychologists would use for emotional constrictions that we may have in a given situation, like the approach avoidance thing with the monkey trying to get his banana, and there's a electric plate there where when he steps forward to get the banana, he gets a shock, but if he runs away, he doesn't get the banana. So there's that approach avoidance. And in karate, I've been in karate for since 1968, and I have a certain amount of experience in fight or flight situations that we become involved in, physical confrontations, where you know, you standing there in front of this bully, and you don't want to run away because that's a show of fear, and you lose your ego and all that sort of stuff, but you're also afraid to fight the guy because it's a fight, you know. What's that got to do with trading? Well, first, let's take a look at stick season in New England, and then we'll go inside because it's a little chilly out here, but and we'll chat about it. But as you can see, we've got all the leaves down now, and I don't know whether I was out and showed this to you recently or not, but there you have it. Stick season in New England. We're here, and that's just the way it is. Rained like crazy last night. If it would have been a little bit colder, as it has been the last few nights, we'd have had some snow. But that's New England. So I got my coffee, and inside where it's warm. Fight or flight in trading. Let's take an example scenario, right? You're in a trade, 20 pip profit target. You're 15 pips toward that profit target, and the price starts to stagger a little bit, and all of a sudden you get this approach avoidance knot in your gut, right? Is it going to go to the profit target? Is it just going to do like a little flutter and then come down a little bit and then continue on? You know, the further away your profit target is, the longer the distance from entry to profit target, the more likely you're going to end up with retracements. And so you know, that's why I like the day trading, because when price starts to chatter and slow down and starts to retrace, it's time to get out, because I'm not dealing with a whole lot of real estate. I'm dealing with 20 pips that I'm trying to get, and if I can get 10 pips out of that, I think anytime you get 50% of your profit target, you're doing really well. I don't have a lot of time to screw around if that thing's starting to chatter at that 15 pip profit level. If I sit a runner stop under that, what am I going to run at? 10 pips below that? Now I'm at 5 pips. Did I get paid for the time and the risk that I put on them? Those are decisions that you don't want to be making in real time. You want to have an understanding of your market environment that you're working in, what kinds of situations you're going to face in that market, and rules to deal with the different situations. Our emotions are situationally dependent. You know, if you're sitting there and you're trading and you're under one emotional state, you know, bars are moving and you're trading along and everything is great. Take that same situation and move that to an NFP, and you're in the middle of a shitstorm. Your emotions change. And whenever you come into a conflicting environment or situation that causes conflict in your emotional state, or you fight, flight, freeze, appease, approach, avoid, that type of thing, and you need to look, if you're not familiar with those terms, they're psychological terms, they're very common. You need to look them up and make sure that you understand them and their significance and the fact that they are situationally dependent. And so this trading situation that I'm talking about, this price 20 pip profit target, and we're at 15 pips, and oh my God, what do I do now? There shouldn't be any question in your mind what you're going to do. You're having an emotional reaction based on a situation that you should know you're going to have an emotional reaction, and you cannot eliminate that emotion You have to change your thought process to other things. And so you can't have your emotion as part of the decision process. Your emotion is going to be there, but your decision process has to be regulated by conditional rules. You have in your trading, you not only have boundary conditions for what rules are around the market itself and the life cycle of a currency pair, but you also have boundary conditions around the individual position that you're in. You've got your exit point, your stop, exit, at entry, and you have your profit target. And those things can be variable. As the price moves into profit, you're going to move that. You're going to move that stop up. You're going to move that risk up, right? And if all of a sudden the price begins to stagger a little bit, you have to have a rule that says, I'm out at that particular point. If you're a day trader, you have to be particularly vigilant for price not making it all the way to the profit target. You could be at 18 pips. What are you going to do? Be a pig and try to hold out for the 20 just because you arbitrarily picked up a number, 20, based on some friggin' structural thing that you have defined that would be defined in 18 different ways if you had 18 different traders drawing that support line for all that structure? What has that got to do with current price action? Those structures may have been created by past institutional traders fulfilling client orders, and those client orders are done. You're going to get new structure. That's why those structures change. How do you know when a particular campaign based on economic conditions in the two pair countries is taking place? You know, you can't. So the viability of whatever structural level that you're setting for your profit target or even for your risk, if you're not setting a static risk level, as I advise, that's all just jump ball shit. That's just best guess stuff. And so when you're watching your price, what are you really watching? You're watching, does it have that special juju juice to get it from where it is to where you want it to go? Regardless of where you want it to go, that has nothing to do with whether it's going to make it or not. Just because you've identified a profit target doesn't mean that that has anything to do with what that price is going to do right now. And so, how do you judge that? Well, that's a topic for another video. But let's just say that you know how to judge when that price action has run out of juice. What's the rule? The rule has to be, I'm out. Not, I'll think about it. Not, well, if it comes back X number of position. Oh, well, what if it continues up, but then it staggers a little bit more? What? No. As soon as you get that pull in your gut, as soon as you have an emotional reaction to that trade, you get out. You're not going to change the emotional reaction. If you sit there, that emotion, that fight, flight, approach, avoidance, emotional tear gets worse. It doesn't get any better. Yes, you will be conflicted emotionally if you don't understand how to evaluate a position at entry, how to evaluate position during position management, what's happening with the price. If you don't have a concept of how price is moving in the individual pair that you have, if you're trying to trade 4 or 5 different pairs, you're screwed. Particularly if you've got less than 4 or 5 years of trading, because you just can't manage all that complexity. I'm trying to teach you how to do this stuff simply. I've been involved in currency markets since 2007, mostly from an academic standpoint, but I did real estate for 40 years. I've been in the financial markets, stocks and options and all that crap, all the way back to the early 80s. That's 1980s for you younger folks. So I've seen all this stuff and all the complexity, and I've learned how to deal with the complexity. Why bring complexity into your trading? You don't have to. If you're trying to study 3 or 4 currency pairs and you've got less than 4 or 5 years of trading, or maybe 3 years if you're an active trader. Look, if you're a long-term trader, you're only making 10 trades a year or 20 trades a year. You're not trading. You're more like an investor. You're going for the long haul. Well, that's not trading. You need to identify what you're doing. If you're trading with 3 minis or 3 or 4 full lots, or even 10 or 20 full lots, you're not in there for the long haul. Why would you expose your risk to such a volatile market as the currency markets for a 2 or 3 month period of time? I've done that. I've had trades that have run 2 months, 3 months, 4 months. And you know, when you go back and you add up your profit and divide that by the number of hold days, you get a number that, well, maybe it's a little better than if you would have been in there on a day trade basis, making 0.5%, 3 times a week, or 2 times a week. You make 1% a week. That's 40% a year. Come on. So who's getting 40% a year? Well, there's a lot of people getting 40% a year because they follow the rules. You don't follow that's a big thing. You're confusing rules with your emotional state. You got to have a rule that not disengages. Well, yeah, it disengages you from the emotional situation that you're being faced with. And the emotions that we're faced with in trading is all going to be around that fight-flight analogy. If you've ever been in a physically challenging situation before, it doesn't have to be a fight or somebody with a knife or a broken bottle coming after you. It could be your boss screaming at you and telling you're an asshole, hit your numbers or hit the door. It creates an emotional fight-flight structure. You can argue with the guy and you fucking get fired, or you can back down and walk out the door and live in fear for the rest of your life. I've been in those situations. I've been an employee. I was a software engineer for 33 years. And I had people screaming in my face, get your fucking work done, do blah, 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 blah. You know what my response is? Get the fuck out of my office. I've got work to do. I'll get it done. And when I get it done, there's not going to be any errors. When I put my code in, there's no errors. They don't come back. 3 times or 4 times in my career, I put code in and it came back and the guy said, you don't know what the fuck you're doing. You made this awful mistake. And out of those 4 times, 2 of them were simply because the requirements were not explained to me. So I'm not going to sit there and let some bully tell me that I don't know what I'm doing or whatever. I'm gonna fight, and I'm gonna flight, because I'm not going to be there to debate it. I don't want to be in a decision situation. The decision situation is based on that employer. Do you value my services? And this is just a blow, and we're both going to go our separate ways, and you're going to realize that I'm not the person that you're going to be bullying around. I'm there to do my work. I love everything, and I'll do what I'm told to do. But don't come into my face and tell me that I'm doing it. And and that comes from 40 years in karate. Well, I wasn't 40 years in karate back then. I was 30 years or 15 years or 10 years or whatever it was. You just don't get in my face and threaten me with stupid shit. I won't fight you. I'll back off as much as I can. But if you continue to come forward and you get in my hot zone, you're on the ground. If I'm in a trade and I'm faced with conflict, I don't want conflict, because conflict builds indecision. I don't want that. As soon as conflict hits, you have to act. As soon as somebody comes up to you and they get in your face, you have to act. You have to disengage from that, or you gotta fight. But it's one or the other. It's got to be binary. You can't go, well, it doesn't work. Because you just get wrapped up into your own emotional state. You're sitting there looking at the trading screen and you don't know what to do, or you don't know how to do it. Is that what you're thinking? Well, I'll figure it out when it happens. No, you won't, because your emotions will have taken over. The fight-flight emotion will overpower all of your best intentions, all of your time farting around on a simulated account or messing around with 3 minis. It all changes when there's money at stake. And the more money that you're trading, the greater the potential for those emotions are. The trade that I've got on right now, it's a 6 full lot trade. I got $60,000 at stake. You don't think that that's going to burn my ass when the price goes against me? The price is against me. It's a longer term trade. I'm a couple of $1,000 under. A couple of $1,000, people don't make $2,000 a month, for Christ's sake. And I'm sitting there dispassionate about the whole thing because I'm not getting involved emotionally in the trade. The emotions are there. It's that I have a process of doing something different. And that's maybe a conversation for another video, because this isn't a psychological video. This is a video that says when you're in a trade and the price is moving in your direction, but it starts to stall a little bit, what are you going to do? Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.